Bitcoin's down about 2% right now, chopping around in the last 5 minutes, so maybe we got something coming. But after yesterday's false alarm, it feels like we're a little battle hardened and ready for today's event. Certainly, Cathie Wood of ARK Invest has been looking forward to this moment. One of the many Bitcoin spot ETF proposals coming from the ARK team. Cathie Wood is the CEO and CIO. Cathie, it is good to have you here on the Schwab Network. Thanks for joining.
Delighted, Oliver. Great to be here.
Much appreciated. Tell me how you kind of see the next 24 hours going. Let's start there.
Well, we do know that I guess the 19B4 was approved, so the exchange got the high sign, and now we are waiting for the SEC to approve our S1. And usually one is a setup for the other, I'd like to think, and do believe that's the case here, but we are not effective yet. I think we will be soon.
Okay, so it seems like all the stars are aligned. Yesterday didn't spoil anything, it doesn't seem like then.
No, it was very surprising. I was doing an interview with our partner 21 Shares, and the tweet came across and we were all, what? And I saw the logo, the Bitcoin logo in the SEC verified tweet. And then I saw Gary Gensler's picture with a bit of a smile. And I said, there is something wrong with this picture. But I didn't know it had been hacked. It just was odd.
That is
but,
funny.
It does appear it has not derailed. I'm sure some security folks at the SEC are having a tough day, but this has not derailed the process.
It's so funny you mentioned that because as it came out, I pointed out the same thing here. I thought the picture was a little odd and I pointed out the smile too. I didn't know, is that part of the process? But okay, so there's obviously a lot of hype built into this. The crypto proponents that have been on my show over the last year have been talking about this for a long time as a seminal moment. How will you gauge the success or the reception of this over the coming weeks?
You know, there has been a lot of excitement, and the price has moved up. It's been an anticipatory move, I think. Many people have been saying there's going to be a sell on the news. This is up too far, too fast. And that very well could be, but I don't think it's going to last very long because this is the SEC's green light, and there have been institutions waiting on the sidelines. They were not going to move until the SEC blessed this. And we've had a lot of our clients and the gatekeepers were not going to allow Bitcoin, even what we did own, GBTC, they would not allow in portfolios until the SEC blessed it. So I do think this is a big moment, and I do think that the flows are going to help us demonstrate that there's real scarcity value here, because you've got Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19 and a half, and the number of Bitcoin ever that will be created is 21 million units. So again, I think you're going to start to see scarcity value playing a big role here.
When you talk about institutions waiting, can you be specific? What type of institutions? Who's the investor that with almost, I think, like up to 100 crypto and Bitcoin adjacent funds, including your own futures-based ETFs? Obviously, there are Bitcoin miners and many other linked stocks. There was the trust. With all those products out there already, who has been waiting for the spot ETF in particular to pull the trigger?
Well, there are a lot of retail holders did not want to go through the friction-filled process, or they were discouraged from it, to get a wallet and figure out custody and all of that. This is going to simplify all of that. It's easy access. And I think a lot of people are waiting for easy access. The early adopters are there, no question about it. And yet we believe this is an asset class that will scale to billions of users. I think in the United States, there are 50 million. I don't know. I think the estimates for around the world, 100, 200 million. We think this is an asset that it is the financial superhighway that the internet finally is accommodating. When developers built out the internet in the early 90s, they did not put in this layer because no one ever thought that financial services or commerce would take place on the internet. It was just a place to exchange information. And even in the 80s, it was illegal for consumers to use the internet. So we were coming from there. And now, of course, we do all kinds of things on the internet. This is going to simplify, take out a lot of middlemen that are there really to control risk, but also they take a toll. This is much more of a peer-to-peer network. So we think there are going to ultimately be billions of users on this network.
I know that you like the internet comparison. To me, where that breaks down is that the company is driving all that. Eventually, at the end of the day, made profits. Microsoft came back after the crash because it made money. It made profits. Over the last 2 years, since we went through a tightening cycle, really the first bear market in risk assets since the beginning of Bitcoin's inception. It never traded alongside a bear market in stocks, arguably even a real tightening policy. Risk-adjusted returns the last 2 years for Bitcoin. They trail gold, they trailed NASDAQ, even crude oil. What I'm trying to figure out is which investor, I got a chart of this from Exanta Data, Bitcoin's way on the left side there. It is positive, the 2-year risk-adjusted returns, but actually gold has done the best. It made a new high, a record, while Bitcoin didn't. Stocks made a record recently. Even with rates this high, Bitcoin hasn't. If I'm an institutional investor, what utility does it provide to my portfolio in any other scenario other than like a zero rate phenomenon?
Yeah, I think you are picking on some endpoint sensitivity there. One of the most important proof points for Bitcoin happened in 2023. Whereas before, most investors thought it was a risk-on asset. It would do well in strong markets. They never thought it would do well in crisis-prone markets. And of course, in 2022, there was all kinds of crisis, and it didn't do well. But what happened during the regional bank meltdown in March of last year? The regional bank index, the KRE, was imploding. Silicon Valley Bank, Signature, Republic, other banks went bankrupt. Bitcoin went up almost, I think it went up 40%, right in the middle. What did that tell us? It tells us we have not only a risk-on asset here, but we also have a risk-off asset. And that spoke volumes to us. In fact, we got converts. Now, leaders of financial institutions call it a flight to quality. We would say a flight to safety. And why do we say that? There's no counterparty risk, unlike in the banking system. The counterparty risk is what caused the 08-09 financial meltdown. Fear of counterparty risk, once again, caused the regional bank crisis. With this fully decentralized, transparent network, there isn't counterparty risk. So we are now saying Bitcoin is not only a hedge against inflation, given its scarcity value, but it is a hedge against deflation, given the lack of counterparty risk. And the other very important thing that's going to happen this year is
well, Cathie, can I jump in real quick before we look ahead? Because when I go back to March here, I've got a 30-day correlation to the NASDAQ. NASDAQ rallied 20%. At the same time, Bitcoin rallied. The correlation between the two, 30 days, Bitcoin to NASDAQ in the months following the regional bank crisis was anywhere between 0.6 to 0.9. So Bitcoin might have gone up, but the NASDAQ did too. The reason why I was looking at the 2-year returns is because that's when we actually got some real economic tightening. And it seems like the market has chosen stocks and gold in the last 2 years during this tightening as a better trade than Bitcoin. So it definitely rallied around the banks, but so did stocks, and with the lower risk profile. So how come I wouldn't rather just be in stocks?
If you look over the history of Bitcoin and you do a 4-year, a 5-year rolling average month by month, every month, Bitcoin has creamed every other asset class. True, it is more volatile, and you're picking up on some endpoint sensitivity.
Well,
Stay
I'm picking the
tuned for our
cycle change is what I'm trying to do. I'm trying to figure out, sorry to interrupt, but I feel like that's important, is that I'm not trying to cherry pick a point. It feels like that's when the cycle actually turned for the first time outside of zero rates and a bull market for stocks. That's the 2-year timeline.
You know, it's very interesting. Many people use that argument when they're talking about everything we do during the bear market. And it was one doozy of a bear market for our strategy in 21 and 22. Many people said, well, the only reason your strategy's ever done any well is because interest rates were at zero. That's absolutely, and we're not going up. That's absolutely wrong. I've been in the business for more than 40 years. And our kind of strategy has done well in rising interest rate environments as well. In fact, in 2017, when interest rates finally did start picking up, not only did our strategy, our flagship strategy, was up more than 85%, but Bitcoin, as interest rates went up, went crazy in 2017. I think it went from $1,000 to $20,000. So your interest rate argument has not panned out through all of history. What I will say has happened, certainly to our equity strategies, is we're in a very high frequency traded market. Maybe 75% of the trading out there at times is high frequency trading. And they get a hold of a few algorithms with their quantitative research, and they decide that's what's going to move the market, whether it's rising interest rates or whatever. And you'll go through those weak spells, but truth will win out. The earnings power of our companies and the value of Bitcoin, the first global, digital, decentralized, rules-based monetary system in history, that is a very big idea. When we did our research, our first white paper in 2015, could Bitcoin serve the 3 roles of money? We invited Art Laffer to collaborate with us. He is a famous economist. You probably know him for the Laffer curve. He's also a monetary scholar. His mentor was Robert Mundell, who won a Nobel Prize for monetary theory. And when he finally figured out what this Bitcoin was, he said to me, you know, I've been waiting for this since they closed the gold window in 1971. A rules-based monetary system. Monetary policy is unhinged right now. This is a rules-based monetary system. I said, wow, that sounds like a very big idea. Remember, this is 2015 when Bitcoin is $250. How big of an idea is this, Art? Well, how big is the monetary base? At that time, it was $4.5 trillion. Now it's $7.7 trillion. This is a very big idea. Right now, Bitcoin's market cap or network value is a little over 800 billion. We think it has miles to go. The scarcity value of institutions pushing in, now that there really only are going to be 1.5 more million Bitcoin minted ever, is going to be quite provocative.
Okay. One question there on the recency part relative to gold, but just to come back in the 2016 rising interest rate environment, NASDAQ went up 90% during that time period. So indeed, rates are going up, but the stock market did great too. So again, the reason for the last 2-year comparison, it's the first time where we've had an opportunity when stocks go down for Bitcoin to uncorrelate. And it hasn't quite yet with stocks at high. And that brings me to the present. What is your explanation for why gold was able to manage to get to a record after our inflationary boom and then this disinflationary thing the past year? If Bitcoin wins in both those environments, how come it's still 20% off the high while gold was able to make a record?
I would say that Bitcoin is still in the realm of disruptive innovation. If you look at our stocks, compared to the NASDAQ, they're still way down because of, we think, this false impression that the only environment they do well in is in a very low or falling interest rate environment. And by the way, I do believe we're going back into that environment. So I think the higher for longer hit our ilk of stock and hit Bitcoin. One of the things that's going to happen this year is the halving. And here we can also draw a comparison to gold. The supply of gold has increased on average, very long-term average, about 1% per year. This year, after the halving, Bitcoin, for the first time, Bitcoin's supply increase is going to drop below that 1% average. It's going to go to 0.9%. So we actually think that as more investors evaluate the pluses and minuses, and they can coexist, of course, gold and digital gold, but especially the younger people who are native to the digital world, they're probably going to opt more for Bitcoin than they will for actual gold.
You think they haven't already through all the different means that the spot ETF will win them over?
Yeah, I do think the spot ETF will win a lot of people over. It's just easier. It's just easier access. And we're all about democratizing access. You can tell that we're not looking to maximize profits on this fund, given the fee level.
For sure.
We are treating it as a public good, the financial superhighway that we think billions of people are going to travel along. So it's going to have all kinds of utility in the future. And so we want to make sure that we tell the story. You know, we're all about educate, educate, educate. So go to our website, arc-invest.com, and you'll see all of our research, prolific research on Bitcoin from our early days. From 2014 was our first piece on how disruptive it was going to be from a technology and perhaps financial point of view. And then we moved into the role of money that it could play, so means of exchange, store of value, unit of account. And then we moved into studying, could this be a new asset class? And back to your former point about correlations, stay tuned. I think these correlations really show themselves over a 5-year rolling period. And the correlations to any other asset over the last 5 years have been very low.
Okay. Hey, I've always said, even as a cynic, when Bitcoin breaks the stock correlation with Bitcoin going up and stocks going down, you've won me over. We just haven't quite had it yet.
We did, though. Yes,
where?
We did.
Which part?
In the regional bank prices.
NASDAQ was up too. NASDAQ rallied back.
It rallied back, but go track the behavior of when Bitcoin bottomed and how quickly it rebounded and how much time it took for the NASDAQ to do that.
Okay. By the way, on the fund, kudos to the fee. It seems like that should be an obvious draw to the drop on the fund. I mean, zero for how long?
6 months or $1 billion, whichever comes first.
Wow. Okay. One other thing that I haven't really seen covered anywhere, and I don't know if you've disclosed it, if you'd be open to talking about your own personal crypto or Bitcoin investments. Folks like Scaramucci have been on here the last couple of years. He's kind of given us hints that, like, outside of his real estate, he's pretty heavy into crypto. Can you give us an idea how much your net worth or how much Bitcoin or crypto linked you own?
Yeah, of my financial net worth, all of it is pretty much all of it is in innovation. Let's put it that way. It's just my degree of confidence in the depth of our research gives me the courage, people might say, to be more aggressive in this realm, either in our kind of funds and private funds, or crypto, primarily Bitcoin. And I would say this is going to be a very rough guess because
sure, no problem.
I don't
appreciate that.
Yeah, my guess is that excluding ARC, the company, and excluding real estate, that of the financial net worth, it's at least 25%.
Okay. Cathie Wood, thanks a lot for your time. I appreciate you joining us here. Big day.
Yes, big day. Thanks so much.
Absolutely, and best of luck to you guys. Thanks a lot. This is what is the CEO and CIO at ARK Invest.